Hi.
Hello. How are you?
Good. How are you?
I'm good. Good morning, Michael. How are you today?
I'm well. How are you all?
We are good. We are good. So Mike, thank you for joining us today. We're gonna wait another minute or so just to see people getting an opportunity to check if we're live. We don't have any viewers yet. The eye is got a 0 next to it. But how was your weekend, Trisha?
Good. Did anybody have any leaks with the torrential rain that we had?
Thank God, no.
How's everybody's roof holding up?
Thankfully, okay. I gotta tell you though, the rain this weekend. I did an open house on Saturday, and I was shocked. The serious buyers came out in that torrential downpour on Saturday, man.
How many people do you have through?
So I had a massive open house.
Massive. It was insane. We had 60 families through. I'm not even joking. 60 families.
And Mike, so the funny thing is that after my open house, I then met clients at that house to do my own showing of her property.
People are still showing up
for the open house an hour later, and they walked in, and I'm like, they have no agent, no nothing. So then I'm just sitting in the I'm like, okay, well, go ahead and walk through. So I did an open house for Trisha at her listing in an accidental kind of way. But
yeah, so rain didn't stop anybody.
Yeah. But all right. So Trisha, let's get to it. We're going to talk about, what we saw this past week. And then as we had promised everyone, we have a special guest with Mr. Mike Thompson from Envoy Mortgage that's going to talk to us about just what we're seeing with interest rates and all that kind of good stuff. So let's get right to it, Trisha, with talking about new active listings.
New active. Yeah. This week we had 528 compared to 582 last week. So a little bit of a decline in the active listings that we have seen.
But what's encouraging is that we had 140 coming soons that hit this week versus only 97. So buyers out there that are discouraged that there's lack of inventory, it's coming. Look,
hang in there.
And the reminder is that this is covering the markets that you and I cover, Trisha, which is Bucks, Montgomery, and Envoy County. So those are where that's coming from. Now, interesting enough, under contracts last week,
we had 698 this week, and then 722 last week. So few less under contract this week than the previous.
But what's really interesting is back on market. And guys, that's what we had talked about, where we're, whether it's inspections that ended up not going well or suitable housing addendums that people just couldn't find another house. And so they ended up going back on the market. All right.
The other thing with this is everybody's like just forced to make a decision so fast. So that cold feet can kick in too. You have to make a decision in like a day, whether you want the house or not. So you're going to have some fall through. So holding out a little bit longer for accepting offers isn't always a bad thing, because it gives people time to adjust and like marinate and decide.
Right. And then the big one is price reductions. We are continuing to see properties getting price reductions.
Yep.
So, I mean, that's just going to show you've got to price it the right way right from the beginning in order to get the opportunity to have multiple offers versus, having to do a price reduction. You have to listen to your realtor and make smart decisions based off of the facts, not on your heart of what you believe your house.
Exactly. Price it in line with the market. The buyers will do the rest.
Right. But now it's time for the good
special guest.
This is our special guest, Mr. Mike Thompson, which Trisha, you and I both have done a lot of business with through the years. And Michael, you are, I'll give you the compliment. You are just so on top of what is happening, and you explain it so well that we wanted to have you come on and explain to everybody what we're seeing right now with mortgage interest rates and all of that stuff. So do you need me to share the screen, Mike, or can you share it yourself? Tell me when you want me to share it.
How about that? Yeah, we'll go that route. So first off, thanks for having me on.
Thank you.
Last week the headline was rates, and it's because the Fed bumped up the Fed fund rate 50 basis points. And what that really means, it doesn't have a direct impact on mortgages. The Fed fund rate is simply the amount of interest that banks charge one another when they lend money overnight to one another. Banks have liquidity requirements, so what they'll do is one bank will lend another bank money overnight. That's the Fed fund rate. So that's the rate that went up. So where you're going to see a change with rates consumer wise is going to be home equity lines of credit, credit cards, car loans. That's what's going to be impacted by what the Fed has done last week with bumping up the Fed fund rate. Now, what's happened to mortgage rates in the last 5 months is this is an unprecedented increase in rates. This is the fastest they've ever increased has been these past 5 months. And they've gone really from 3%, where we started the first of the year. Last week, I quoted, 5.5, 5.75 in some scenarios. Lower credit scores are looking at 6s. So, what's causing all this? And it's a combination of inflation, and that's key. The war in Ukraine and, what it's done to the cost of oil plays into that a little bit. But really, what a lot of people don't realize is the Fed has stopped buying mortgage-backed securities. And that also has probably the biggest impact on mortgage rates, because the Fed, what they've done over this last 10 years is they've really manipulated mortgage rates to where they've kept them below 5%. And if you want to pull up that first graph, I think this is a good visual.
Wow.
What that is they started tracking mortgage rates back in the 70s. And that shows you what the average rate was for every year since 1970. And, we remember our parents they bought a house and their rates were double digits, certainly in the teens. And then when I bought my first house 15 years ago, my rate was 6.75. And then when the financial crisis hit in 10 years ago or 12 years ago, that's where the Fed started to manipulate mortgage rates and buy mortgage-backed securities. And that's where we've seen this run of rates below 5% for well over 10 years now. And, again, if you take just a step back, we're probably getting back to what is more of a realistic range of interest rates and where they should be versus to where they've been based on what the Fed has done. So, what this means to most buyers is simply what I'm going to throw you on the spot there, Shelby or Trish. What does rising rates mean to most buyers out there?
Less affordability.
Yeah. Exactly.
So, that's exactly it. Payments are up, affordability's dropped. But think of it this way: most people's largest expense is housing.
Right.
And by buying today, you have the opportunity to lock in that cost forever. And what's scary right now is rents don't come down. I mean, when's the last time you heard somebody having a rent decrease? It's something that does not happen. I was with a leasing manager of a 200 unit complex a week ago. And when they opened up their latest facility, rent started at $1,500. And that was 5 years ago. Today, that same complex rent start at $2,300. And that's a massive increase. So, you got to look at this in inflationary times. It's really important to invest your money in an asset that traditionally holds or grows in value. And if you take a look going back to the 70s, if you take a look at every single decade, home appreciation has always outpaced inflation. There was one period in the 80s where it was about even. But if you're trying to find some type of a hedge against, your retirement portfolio, which has probably gotten beat up this year, most are down 12 to 20%. And a great investment right now is real estate. Even though rates are up, historically, it's going to outpace inflation. Home appreciation is still going to be probably double digits this year. So it's a great way to sort of hedge is to buy real estate. Right. So a couple of things. One, people are getting priced out of a home. And it doesn't matter if they're renting or if they're buying. And think of it, that's a scary thought. Food, shelter, that's what motivates people. And when you start to see that home affordability is getting to a point where, they're not sure what they're going to do. And the way to take control is to buy now. If you're on this video, I would suggest that, you reach out to Trish or Shelby as soon as possible. And, if you're worried about what your landlord's going to do with your next rent increase, that's all the more reason to reach out to Shelby or Trish right now, because it is scary with what's happening with rent prices. And again, the way to bet against that is simply to go buy a house right now. and then that largest expense is going to have a fixed cost, and
Right.
that's what we're trying to get across.
I think you had one other graphic that you were going to show us.
Yes, give me a second here.
Because I found that one very interesting as
Yeah.
well.
Yeah, so can you see my cursor as well?
Yep.
Yeah, okay, cool. So I love this graph, and this just shows on the left-hand side, you have different rates. And then you also up top, you have home loan amounts. So let's just say that if you were in the market maybe a month and a half ago, rates were, let's say, in the high 4s.
Mm-hmm.
And let's just say that if your mortgage payment at 4.75 was $22.95 a month, you're at a $440,000 price point. Now, in this rising rate economy, that price point has simply dropped down to where you're probably about $390,000 for the same mortgage payment. And that does make a difference, especially with low inventory and things like that.
Right.
The higher mortgage rates are definitely having an impact on people.
Especially the people that can only, if they're only approved up to 250, like there's hardly anything for them. So it's really important to try to get something now before.
But as we saw previously, earlier on in this, there were 140 coming soon.
Right. Coming.
So properties are coming.
Bringing back the positivity.
Let's end it on a positive note.
So here's how I'll describe this market, and you can tell me if you agree or not. But I think that the best word to describe this market right now is chaos, and it's chaos from the inventory issues. It's chaos from all the competing offers that are out there. It's chaotic for the seller. It's chaotic for the buyer. It's chaotic with where rates are right now. And in chaotic markets, the most important thing that a buyer needs is the right team in place. And that's not just the realtor anymore. It's the realtor and the lender, and that sort of triangle of trust where those three components need to work together to make sure that we've overturned every stone to make sure that that buyer is in the best position possible to get their offer accepted. And we have a number of different strategies, everything from how PMI plays into this right now.
Mm-hmm.
We have rate buy down strategies. Adjustable rate mortgages are making a comeback now because it's still a way to get into a rate that maybe starts with a 4. But also, if your lender hasn't sat down and showed you a rent versus own comparison and what that means 5 years down the road with how much money you could have wasted on rent versus how much you could have built in equity, or if your lender hasn't done a cost of waiting where they can show you that if rates continue to climb, here's how that home affordability in the slide we just looked at is going to impact.
That's huge. Yeah.
So Envoy, the company I work with, has been very proactive with making certain adjustments where, we've changed a lot of our rate lock policies just to understand what's going on in today's marketplace. And again, if you haven't talked to a lender and had your approval updated recently, then I would certainly suggest doing so.
Awesome. Michael, thank you so much for coming on today and just helping explain what's going on in this chaotic market that we're in right now. We really appreciate it.
I appreciate having me on there. And I will say this much. For the people that are buying right now and they're not happy that it rates maybe starts with a 5, understand that there's a good chance we'll be in a recession here within the next handful of years. Every time we've had a recession, that has caused mortgage rates to drop dramatically. So the people that are buying today will have some relief down the road when rates improve, and that will happen.
Right. So they could do a refi then or something. Yeah. That's awesome.
All right, guys. Well, that is our weekly recap, and we will see you next Monday morning at 8:15. If you got any questions or you want to know about something before then, just shoot us a message, and we are here to keep you informed.
Put your questions in the comments, too, so that we can answer them. We need something to talk about.
All right. Well, you guys have a great week, and we will see you next Monday. Thank you.
All right. See ya.